Welcome back, everyone. This is Levi on the Levi Spade Show. Back again this week with another episode. This week I wanted to focus on my investment game plan for the years to come. The questions I'm asking myself are, how should I focus my time and energy on the portfolio? What kind of investments should I be making now so that I can set myself up for success in the future when it comes to my investments? So hopefully you guys are still well, doing okay, being inside. Hopefully we can now see the light at the end of the tunnel and things are slowly starting to open back up for business. I'm sure hoping that some of the favorite spots I hang out at will still be open when this returns back to normal. Again, this is an excellent time where things aren't quite as busy and you're able to focus on your investment plan. When I started in investing, I was told right away by the professionals that you should have some type of game plan and playbook for how you're going to interact with the markets. How are you going to take that hard-earned money and put it to work for you? Like any sports team, if you go into a game against your opponents without a game plan, you're most likely going to lose. It's very important and critical to have a game plan in place, some rules and guidelines on how you're going to invest. So I wanted to just give a quick update to you guys on how I'm forming my own investment strategy and how that shapes my trades. Obviously, you may know there are many different types of investments. Some are very quick and some are very long and take quite a bit of time until you see a return. There are many different types. There's bonds, ETFs, real estate, anything where your dollar works for you and or against you if it goes bad, and there's some type of different result, whether it's a negative or a positive, and how long it takes varies a lot. So what kind of investment am I doing these days? Well, I've chosen for myself that I'm going to only focus on stocks at this point. I want to just pick one thing, get good at that, and then consider and include other investments in my portfolio. But for right now, for the sake of my journey, I just want to focus on one thing, get good at that, and then move on to the next. With any good investment strategy, you want to have multiple streams of income. And I've seen so many other professionals on YouTube and in books and just talking to other people, meeting them face to face. They've all told me that their secret is multiple streams of income. The reason is if one income disappears, then you're not out on the street. You have redundancies and you're able to rely on those other streams to keep you floating. What streams of income am I focusing on right now? Well, for one, it's my career and day job. Secondly is the YouTube channel, which you're watching right now. And then thirdly, my stock portfolio. I want to get to a point with my stock portfolio where it'll be able to give a return and maintain that same value, and with the rise and return on investment with stocks, that it will continually support me in my later years when maybe another stream of income disappears. One big question that is in a investment plan is, what kind of sector or industry are you going to invest in? Is it going to be one or is it going to be in many? And the stocks that I'm very interested in putting my money towards is the tech, consumer discretionary, communications, and energy. A while back I read a book, One Up on Wall Street, written by Peter Lynch, and he talks about how you should invest in companies that you know and love right now in this day and age. To look around you and to think about the companies or the products that you own and understand. Now, if I were to jump online or Google some biotech company, I am not going to know the ins and outs of that and what all that terminology is about or how things work. With tech or some of the consumer discretionary stocks, I'm going to understand a little bit more about how things are going and how their products work because I own a lot of them. Make sense? So these are companies that might be in the headlines a lot, and rightly so because they're a very popular company where they're in my demographic and it's something that I'm using on a daily basis. So there is some merit to that strategy, and it's something that I'm pursuing at this time. So another aspect to consider is market direction. Are you going to focus on trades and positions going long or going short? And this just simply means, are you going to invest your money on stocks that are going up and rising in value, or stocks that are going down and decreasing in value? And I've chosen that for the time being right now, as I'm learning in my financial journey, that I'm going to continue with long positions. I'm going to only focus on this for right now and not try to get into situations where I'm trying to get into bearish trades and think about stocks decreasing in value. There's some risk to that. They can only go down so much compared to long positions where you're bullish and the returns can be infinite. They can be thousands of percent higher than when you enter. Now, a subset category to kind of define how your strategy is going to be cemented, and that's indicators. Are you going to focus on the fundamentals or technicals or a combination of both? And in my situation, I'm going to focus a lot on fundamentals, and you've seen this from my other videos that I have in my channel, is I'm going to take a lot of time to look into different metrics of the business when it comes to their revenue, their cash flow, their profitability, their margins, things like that. So I want to have a strong grasp of how these businesses operate and run. How are they allocating their resources? How are they treating their employees? And really focus on that and not get distracted by other ways that you can assess a stock to invest your money. On the technical side, I'm going to be very interested in candlestick patterns. You look at a stock chart and you can change the way that you look at it, whether logarithmic or percentile. And I'm very interested in the candlestick patterns. It tells a lot there as to the price and the path of the price action of the stock, more so than a line graph. Technical assessment will be part of my strategy, but fundamentals will be the majority and have more weight. Now, what kind of investor am I, and where am I wanting to get to? For right now, I want to be a value investor and focus on the long term. You know, I'm a young guy and I still have many years to go. There's no rush. I don't want to be in high risk situations and positions. I'd rather take a step back, be a little patient, and take those longer positions and be a value investor. Spot good businesses that are at a good price with their stock. Day trading isn't going to be part of my strategy at this time. There's just too much risk and volatility with the markets right now, and that's not how I want to spend my time. From the get-go, I've learned that time is probably your most valuable asset in your life, and so I want to be able to enjoy life and be able to spend time on very important things when it comes to relationships, when it comes to self-development. I really want to be able to put my $1 of my money into the markets and have it work for me over time and not have to worry about fluctuations at a very small scale. One of the most important things that is in my strategy is thinking about the day-to-day. Obviously, right now, I'm very interested in investing and learning, and so I'm looking at the markets every day. I'm seeing the changes, the rise and fall of stocks, sectors, and the different markets. Often I have all these questions floating through my head as to which is performing the best right now, considering all the conditions with the economy. What do I remind myself every day? Well, there's a few phrases that I wanted to remind myself of. And some of the reasons are to keep me on track, to build upon what I've learned. I don't want to forget it. To prevent me from becoming distracted. There's so many marketing tools, employees out there. There's so many different ways to think about a different strategy or way of investing. I want to really be able to choose topic and then to really focus on that and become good at it and understand the ins and outs of it. One of the phrases that stuck out to me, which I think will really help me long term, is to buy low and sell high. Something that I remember very clearly is that this doesn't just apply to investing in the markets. This applies to all aspects in life. If you think about it and you go out and do grocery shopping, you don't want to buy the highest priced butter or the highest priced bread. You want to be able to get the cheapest price and then put your money elsewhere for entertainment or other important bills that you might have. Things that contribute to me buying high are jumping the gun, thinking that something is low when it's really relatively not compared to the past history of that particular item. FOMO, fear of missing out. A lot of times I'll buy something and not be patient and then find out the real reason and cause of it was because I had that fear of missing out where someone else had something and I wanted it as well. And I was afraid I was going to miss out on the returns. And then all on the flip side of that is fear of losing, of being, when something's expensive and you have something in your possession, you don't want to lose the overall value of it. So if you have a stock price at a really high price and you've had it for a while and you start to see it decrease, then that fear of losing creeps in and you might make a decision where you're selling it low instead of at a higher price. So this has happened to me in the past with several positions I had. I sold it too early because I started to see the price dip and I wasn't patient enough and I had that fear of losing and executed that trade prematurely. So just remember that. Another guiding thing that I want to remind myself every day is fewest trades. The best investors out there are good at this. They're masters at it, is executing the fewest trades, but then having the highest returns. They had the conviction of which businesses are going to do the best. They stuck with it. Those businesses did perform as they thought and really outperformed the markets and then rewarded those investors. Keeping that big picture mentality in your mind of 10, 15, 20 years can really help with this idea of fewest trades. It's like having the most elegant code and not having thousands of trades going on every single week or month. You'll find too that you can free up your time to do other things that will benefit your life and generate you income potentially. One hidden aspect that I found that I want to always remind myself of is to continually learn. I see all these great heroes and people around me right now, whether it's on TV or YouTube or the books that I read, they're all continually to learn every day. They're reading a lot, they're meditating, they're meeting with people, and they're focusing on self-development. So this is something I want to include in my own investment strategy, and it's something where it's not in the fundamental department, it's not in the technical department, but it's something where it's focusing your time and resources on yourself to help your mind soak up more information. You can look at it too as challenging yourself, and this is something I want to do in my own life and be able to see something I want to learn or know and challenge myself to be able to accomplish it in a certain amount of time. I challenge you too, if you haven't hit that like button, to do it now. It greatly helps my channel, and I'd love to hear in the comments what you learned recently. I just love the idea of challenging and exercising the mind. It's going to really benefit the future trades and decision making that will go into future investments. This whole idea of investing and having patience is key. There are certain factors though that I think influence this whole area, and one of those is peer pressure. One of the things that I think has accelerated my investment journey is to have another person, acquaintance of mine, and be able to bounce ideas and share with him the trades that I've made, the things that I've learned, the mistakes, the small wins that I've had. It's really helped me digest and to spew out the little tidbits that have been in my journey. And likewise, he's been able to do the same and reciprocate that and be able to share with me his errors and what he's learned and his observations about certain stocks or markets. Right now, currently, on social media and the internet, there's this big force, and that is this big push for people to get rich quickly. And everybody's got this strategy to get rich quick with little time or effort. And it's so easy to fall into those traps, to click on those buttons. And this is something where I want to really protect myself against, because it's so easy to get led astray or deceived with this type of marketing. I really want to be able to save myself all that time and headache and just focus on what I've learned, the strengths that I have with investing, and be able to just continually allow that snowball to build up. One other thing about the overall stock market that I think is an observation of mine is the reaction, specifically the reaction of the markets to headlines, to certain businesses, CEOs making comments on social media, leaks coming out, fraud happening. These greatly affect the security and the price of which people are willing to buy and sell stocks. If I have a rock solid patience for things like this, I won't get caught executing a trade too quickly. If I have that rock solid patience, then I'm going to be able to weather those, take a step back and think, all right, what's the true reason for why this is happening, and be able to slowly, methodically be able to react to it and not get caught like everyone else. So that's just one aspect of why I have patience in my investment strategy. You've probably seen a lot of different tools and websites that I've gone to, or screenshots that I put into my videos. And I just want to share with you real quickly some of the sources for education that I've come across that I've found really helpful, that I think will benefit you guys. So the first one is Market Watch. I stumbled across this where I was thinking, where is there a place that I could paper trade and be able to look at charts quickly, be able to mark them up, and be able to include one of my acquaintances to be able to pick stocks and a portfolio and play against me, see who has the most gain. Up until then, we had just been using Excel spreadsheets and our own mental thinking and math on it, which you can imagine would be pretty off. So Market Watch was a great way to be able to say, okay, each of us have $1,000 to invest in certain stocks, and we can go long or we can go short, and we can see at the end of the year who's got the most amount of money. Again, it's Market Watch virtual exchange. It's totally free to create an account and then to begin a private game or a public one and allow other people to join. They have many other games on there. I joined one just for fun to see what it would look like. I'm not sure how much more time or energy I'll put into it, but it's just kind of interesting to see their portfolios and where they think the markets will move. The next one is Yahoo Finance Charts. And out of all the brokers that I've visited so far, I found that Yahoo Finance Charts is very flexible and very visual. I'm a very visual guy. So Yahoo Finance is a great tool that I've just found remembers all of the markings that I've made. It's also free to sign up and to use their charts. They have a premium service. I'm not quite ready to use those services yet, but they're free charts, and the tools that you can draw on them are free. So I found that to be really helpful. Hop on over there, check it out. I think you guys will like what you can do with that. And then the Robinhood app. You know, like everyone else, I thought, okay, there's nothing to lose. Robinhood app is free to use. Very simple process to hook up your bank and to put some money in there. And very simple interface. Now, one of the things that I found easy to see was a little bit about the company. The quarterly earnings are right there as you're scrolling down. You can see whether they've beat or met or missed their quarterly earnings. You can find out a little bit more about the stock just by tapping on the chart there, and it will show you a little data. But other than that, there's not much you can do with it. As time goes on, Robinhood will add more features to that app, but for right now, their sole purpose and intent was to keep it simple for newbies. TD Ameritrade website and app by far is the most advanced and best comprehensive tool that I've found so far. So that's where I've spent a lot of my time. TDAmeritrade.com and their app called Thinkorswim. Really cool name. I kind of like it. Spin off of Thinkorswim. Their app, Thinkorswim. Great naming. Anyways, I spent a lot of time in their mobile app because, like everyone else, I'm on the go. Got my iPhone in my pocket. Thinkorswim really does allow you to put your own channels in there, their trend lines, text, you name it, everything. Very nice visuals, very responsive, and you can get pretty complex with the setups and the indicators in there. I found TD Ameritrade to be very good. Their education section is also very comprehensive and beneficial. They're not a sponsor of mine, so I'm just saying this straight out. I found their tools to be very good. In their education, I've gone through several hours, quite a few hours in their website of going through exactly, what is a stock, how to place a trade, options, and just understanding at a very deep level what it's all about. So if I encourage you, if you haven't done any formal education for investing, especially in stocks, there's a free way to do it, and that's a TD Ameritrade. I can only imagine that there are other brokers out there that have an education section, but TD Ameritrade has made it very easy to access and promotes it really well. What does your investment playbook look like? I'd be very interested to hear about it in the comments below. Obviously, there is no absolute right or wrong way. That's the beauty about investing, is there so many different ways you can do it, and depending on your tolerance level for risk, it can be customized to fit your style and your goals. Well, thank you guys so much for listening. If you're still watching this video, good on you, and make sure to hit that like button if you've enjoyed what you've heard from me. Subscribe to the channel and hit that bell icon if you want to be notified when I upload my next video. I'll see you guys in the next video.